This is not financial advice. I'm documenting my thoughts about Tesla. The stock is currently trading at about $705 with a market cap of about $720 billion. But just today they announced a 3:1 stock split, so each stock will be worth about $235 now, and whoever holds one stock will now hold about 3 stocks. Stock split will not change anything with respect to business, but it will make the stock look affordable for people who cannot buy fractional shares, especially people outside of USA. And it will make easy for the option traders because the option premiums will be lower now. The current market cap for this company is about $720 billion, but when I look at the past 12 months, their revenue is about $62 billion, which represents a price to sales of about 12, which is really expensive. With respect to earnings, they made about $8 billion of net income, so that represents a price to sales of about 90, which is extremely expensive. But people are still buying this because it's a growth stock. As a long-term investor, I'm not bothered about all these short-term moves, but I want to evaluate this company's stock potential in 2025 to see if today's price is an entry point. Elon Musk is promising that the company would grow about 50% in the next 4 years. So that would result in a $275 billion of revenue for this company in 2025. But I have to see whether it is realistic or not, right? Because ARK has given a projection that Tesla can make about $450 billion of revenue in 2026 just from cars. But when you do a back calculation, that requires a production of 10 million cars in 2025, which is physically impossible for Tesla. So in examining Tesla's production capacity, they can make 4 million cars in 2025. If I assume $55,000 per car, they can make $220 billion of revenue just from cars in 2025. I'm not counting on full self-driving in 2025, but I am positive that they can come up with some sort of product with which they can charge about $10 to $15 of monthly subscription fee, right? So this $275 billion of revenue looks realistic. Historically, car companies have achieved single-digit to low teens of net profit margin, right? So I have to take that as a reference for Tesla's net profit margin. And since Tesla doesn't spend any money on ads, they don't have a dealer network, and they are very efficient with respect to assembly processes, I can assume that they can make 20% net profit margin. It is still optimistic, but I think it's reasonable. So I'm going to assume 20% net profit margin, which will result in $55 billion of net income in 2025. When it comes to multiple, this is a company that's growing at 50% year on year, but has a net profit margin of about 20%, right? So I can easily pay a multiple of 30. So for conservatism, I'm only going to assume a 25 multiple though. When I apply this 25 multiple to their net income, that will result in a $1.35 trillion of market cap in 2025, which will translate to about $1,350 of stock price. When I adjust that to the stock split 3:1, that will be about $450. So overall, I can see almost 2x in 4 years for Tesla. But having said this, the stock price can go to like $2,000 if people are willing to pay a higher multiple, and that is totally possible if Tesla can deliver on its innovation with respect to full self-driving and Optimus project, right? So I definitely see a conservative 2x